So let's have an example of a manufacturing account. The following data has been extracted from the books of Nature Limited. You are required to prepare a manufacturing and trading account for the year ended 31st December 2012, showing the following: the cost of raw materials consumed, prime costs, factory overheads, then the factory cost of production plus the cost of goods sold, then the gross profit. So we've been given these figures. Ledger balance is at 1st Jan 2012. We have the sales, then the stock at the start, raw materials, work in progress, finished goods. The opening balance is for raw materials, work in progress, and then finished goods. These are the ones. Then the purchases of raw materials are there. Then the direct wages, royalties. Then we have factory overheads. We have factory light and heat, factory rent and rates, insurance of factory building, factory general expenses, office rent, office electricity. Then notes, stocks at 31st December. We have raw materials, that is the closing stock, work in progress, closing stock, finished goods, that's the closing stock. Then we have depreciation of factory machinery was USD 14,000. So they want us to prepare a manufacturing account and then the trading account. Yeah, trading account is like the income statement. Yeah, so we start with the manufacturing account. Nature Limited is manufacturing account for the year ended 31st December 2012. Like that. So the figures are in USD. Yeah, USD. So this is the formatting of the manufacturing account that we had. So this is the format that we are going to follow when we are doing our question. So we start with opening stock of raw materials, add purchases, carriage inwards in case they are there. Yeah, like that. So that's what we start with, opening stock of raw materials. Opening stock of raw materials according to the question. We have stock at the start, which is raw materials 24,000. So it's what we put here, 24,000. Then we add the purchases of raw materials. Add purchases of raw materials. Do we have it? Yes, we do. It is this. So it is 425,000. Then we are supposed to also add carriage inwards, but it's not there. According to our formatting, we are supposed to add carriage inwards. Then we are supposed to less return outwards, but these are not there in the question. Yeah, meaning we are going to just go direct and less closing stock of raw materials, of which we have that one. So we less closing stock of raw material. Closing stock of raw materials. The stock at 31st December, the raw materials, it is 25,460. So 25,460. Yeah, what we get is the cost of raw materials consumed. So it is 24,000 plus 425,000 minus 25,460. That is 423,540. That is the cost of raw materials consumed. Then according to our formatting, the next thing is, we've already gotten this, the next thing is to add direct wages, royalties, and then direct expenses. Yeah, so we add according to the question. Did we have direct wages? Yes, we have direct wages, and then we have so we have the direct wages and then the royalties. We do not have direct expenses, so we add this and that. So we add direct wages and also royalties. So the direct wages is 126,700. The royalty is 8,600, like that. So what we get is the prime cost. We get this plus that. Plus 126,700 plus 8,600, like that. So it is 558,840. Yeah. So we are here according to the formatting. Then we go to the indirect manufacturing cost or the factory overheads. That is the next step. So we have factory overheads. So factory overheads, we have factory light and heat. So factory light and heat, it is 7,800. So 7,800. Then we also have factory rent and rates. It is 14,500. We have insurance of factory building. Insurance of factory building, it is 4,500. Then we have factory general expenses. Of 28,000. We have office rent and office electricity. So anything that has office on it is not put in the manufacturing account. it will be put in the income statement. Yeah, so we leave that out. We have depreciation of factory machinery, so we also put it here. Depreciation of factory machine, which is 14,000. Yeah, so we add so that we get the total factory overheads. 7,800 plus 14,500 plus 4,500 plus 28,000 plus 14,000. What you get is the total factory overheads, which is 6,800, like that. Then we said prime cost plus factory overheads. What we get is the cost of production, or the production cost. So this plus that, that's 558,840. So it is going to be 627,640, like that. Then we are supposed to add opening work in progress and less closing work in progress. So according to the question, opening work in progress was 23,000. So 23,000 here. Then the closing one was 22,800. So 22,850. Less. Yeah, what we get is the production cost of goods produced carried down. So this plus this minus that, plus 23,000 minus 22,850, like that. 627,790, like that. So that is the manufacturing account that they wanted us to prepare. Yeah, thanks for watching. In the next video we shall be having the trading account.